Welcome to our Hong Kong Brief program. Today, we have some exciting updates for you. First, Japanese stocks are on the rise, leading the gains in Asia as semiconductor-related shares follow their U.S. counterparts. Investors are eagerly waiting for Jerome Powell's testimony to Congress, which could have significant implications for the market. Next, the Hong Kong government has unveiled new proposals for regulating ride-hailing services like Uber. These proposals include tougher penalties for illegal services and the introduction of licensing to regulate platforms. However, most Uber services will remain illegal until at least the second half of 2025. Uber has welcomed the move but is calling for a workable licensing regime. Lastly, Hong Kong stocks are experiencing a decline ahead of the release of China's inflation report. The Hang Seng Index and the Hang Seng Tech Index both dropped 0.4%, while the Shanghai Composite Index retreated 0.1%. This report could indicate weak domestic demand and factory gate deflation. Please stay tuned for the detailed coverage. Yahoo US reports that Japanese stocks spearheaded gains in Asia, with semiconductor-related shares trailing their US counterparts upward. The Nikkei 225 stock average reached a new pinnacle, pushing its yearly gains to over 23%. Meanwhile, equity indexes in Australia also surged, and US stock futures saw a rise following the S&P 500 closing at its 35th all-time high this year. Conversely, shares in mainland China and Hong Kong dipped, while the dollar strengthened against major currencies. Investors are keenly awaiting Jerome Powell's testimony to Congress, seeking clues on the Federal Reserve's outlook amid mounting pressure for interest rate cuts. In China, the central bank's new liquidity operations triggered a bond market sell-off, and analysts anticipate June CPI to rise due to higher pork prices. In Australia, consumer pessimism deepened due to inflation concerns, mirroring movements in U.S. Treasury bonds. South China Morning Post reveals that Hong Kong authorities have proposed new regulations for ride-hailing services like Uber, a decade after the service began operating amidst resistance from taxi drivers. The Transport and Logistics Bureau plans to impose stricter penalties on illegal ride-hailing services and introduce a licensing system to regulate platforms, taking cues from cities like Singapore and London. The government aims to curb illegal operations by suspending vehicle licenses and impounding cars involved in unauthorized ride-hailing. However, most Uber services will remain illegal until at least the second half of 2025, pending a regulatory framework. Uber welcomed the regulatory direction but cautioned against capping ride-sharing licenses, while taxi associations supported the move for fair competition. The proposals also include introducing premium taxis to elevate service standards, addressing issues like cherry-picking passengers and overcharging. South China Morning Post also reports that Hong Kong stocks continued to decline ahead of China's inflation report, which could reveal sluggish domestic demand and persistent factory gate deflation. The Hang Seng Index fell 0.4% to 17,447.84, with the Hang Seng Tech Index and Shanghai Composite Index also retreating. Analysts expect consumer prices to have risen by 0.4% in June, up from 0.3% in May, while producer prices may have dropped for the 21st consecutive month. The cautious sentiment among investors was evident as Chinese stocks reflected unease ahead of the inflation data release. Leading the market decliners was Meituan, which dropped 3.6%, followed by Mingyou Dairy and Anta Sports. New market entrants in Hong Kong and mainland China also saw declines, with Fangzhou plummeting 43% on its debut. In contrast, other major Asian markets like Japan's Nikkei 225 and Australia's S&P ASX 200 saw gains. South China Morning Post. Hong Kong's Financial Secretary, Paul Chan-Imopa, recently highlighted the city's competitive advantages over Singapore in the global talent race, citing its diverse natural landscape. However, high housing prices and concerns about freedom have driven many away. While Chan pointed to Hong Kong's strong education system, many argue Singapore's is superior. Hong Kong's constant comparisons with Singapore reveal insecurities and a need to learn from Singapore's success in attracting global talent. For instance, Hong Kong's Top Talent Pass scheme is less holistic than Singapore's One Pass, which offers a more flexible approach to applicants. Additionally, Hong Kong's stringent income and academic requirements might exclude potential talent like a young Bill Gates. Addressing legal ambiguities for non-Chinese residents and fostering deeper relationships with Southeast Asian nations through exchange programs could help Hong Kong diversify its talent pool. Strengthening academic collaborations and establishing a World Economic Forum Center could also bolster Hong Kong's position as a startup hub. However, if Hong Kong continues to focus solely on complementing Shenzhen's startup scene, it risks losing out on tech companies that have moved to Singapore. Introducing a visa for digital nomads and thinking outside the box are crucial for Hong Kong to maintain its relevance and prosperity. South China Morning Post. Passengers on an MTR train in Hong Kong heading to Kennedy Town from North Point were evacuated after an air conditioning unit malfunctioned, releasing an odd smell and sparks. The incident, caused by a short circuit, occurred at 6:47 a.m. on the Island Line. The train was stopped at North Point Station, and all passengers were instructed to disembark. Fortunately, no injuries were reported. The train was later moved to Central Station for inspection. This incident highlights the importance of maintaining and regularly inspecting public transportation systems to ensure passenger safety and prevent disruptions. South China Morning Post. A female passenger on a Cathay Pacific flight from Hong Kong to London sustained a head injury after a piece of cabin baggage fell from an overhead compartment. The incident was reported to the police at 11:22 p.m. on Monday, with the fire service department logging it at 11:19 p.m. The passenger required medical assistance at London Heathrow Airport. The flight, originally set to depart at 11:15 p.m., eventually took off at 12:06 a.m. on Tuesday. This incident underscores the need for passengers to secure their hand baggage properly and for airlines to ensure overhead compartments are safe to prevent such accidents. South China Morning Post. Amid a business slump in Hong Kong, some restaurants, particularly in the catering sector, are abandoning the Octopus e-payment system to cut costs. This trend is driven by a growing number of residents crossing the border to spend in mainland Chinese cities like Shenzhen, where goods and services are cheaper. For instance, Golden Garden Cafe in Sham Shui Pa has stopped accepting Octopus payments but continues to use Alipay HK, which offers a more cost-effective model for merchants. Wuyangchun Shanghai restaurant in Causeway Bay has also reverted to cash payments, citing simplicity and cost concerns. Lawmaker Michael Tien Puk-sun noted that the practical inconvenience of Octopus, especially in wet markets where vendors prefer not to remove their gloves to use the device, could be a reason for this shift. Octopus is set to announce measures to support small and medium-sized enterprises and micro-businesses, as the competition among e-payment platforms in Hong Kong intensifies. South China Morning Post. The first half of the year saw a significant increase in distressed real estate sales in Hong Kong, accounting for about 3/4 of the total transaction volume. This surge is attributed to rising interest rates, which reached a 23-year high, making it challenging for investors to service their debts. CBRE reported that overall deals amounted to 23.1 billion Hong Kong dollars, with distressed sales contributing 16.8 billion Hong Kong dollars. High-profile properties like a mansion linked to China Evergrande Group's founder and One Harbogate East Tower in Hung Hom have been sold at significantly reduced prices. Reeves Yen of CBRE Hong Kong predicts that distressed sales will continue to dominate the market in the second half of the year, as high interest rates persist and banks may start seizing assets to meet debt obligations. South China Morning Post. Hong Kong badminton star Happy Lo Xin is preparing for her Olympics debut by addressing her sleep issues, which have plagued her before major matches. Despite her junior status, Lo has climbed to 44th in the world rankings from around 250th just a year ago. She has sought help from a sleep expert to overcome her struggles, trying methods like meditation and regulated breathing. Sleep expert Anna West, who has worked with top athletes, emphasizes the importance of accepting occasional poor sleep to improve overall sleep quality. Lo's journey to the Olympics includes a series of competitions over the past year, culminating in her participation in the Paris Games. Her commitment to badminton began at age 9, and despite setbacks due to COVID, she has shown remarkable progress, winning several international tournaments. Lo aims to perform her best at every point in match, driven by her own high expectations. South China Morning Post. Asian investors are preparing to shift into a risk-on mode in anticipation of upcoming interest rate cuts, according to a survey by Fidelity International. For over a decade, investors in the Asia-Pacific region have allocated nearly half of their assets to cash-related products. However, with the U.S. Federal Reserve expected to cut rates, there's a growing inclination to move towards equities and bonds. The survey, which included over 6,000 respondents from 6 markets, Australia, China, Hong Kong, Japan, Taiwan, and Singapore, revealed that 53% plan to increase their equity allocation, while 64% are interested in income-producing assets. Investors in Taiwan, Singapore, and Australia are particularly keen on riskier assets, with about 60% planning to make such a shift. Despite the Fed maintaining rates between 5.25% and 5.5% in June, a report from Morgan Stanley anticipates rate cuts by September, driven by a deceleration in inflation. While there's enthusiasm for risk assets, 40% of investors still intend to increase their cash positions, especially in conservative markets like mainland China and Japan. South China Morning Post. The legacy of wuxia novelists Jin Yong and Liang Yuxing continues to captivate audiences, as commemorations mark the centenary of their births. Jin Yong, born Louis Cha Liang, and Liang Yuxing, born Qin Wentong, are celebrated for their vivid portrayal of Chinese martial arts in literature. Their work has inspired numerous TV series, movies, and even video games. Jin Yong, known for characters like Guo Jing from The Legend of the Condor Heroes, and Liang Yuxing, whose works include Seven Swords and The Bride with White Hair, revolutionized the wuxia genre in the mid-1950s. Jin Yong's beautiful writing and addictive stories made him a cultural icon, while Liang's works were rich in historical references and traditional Chinese poetry. Both writers had distinct approaches to their craft, with Jin Yong's rebellious and entrepreneurial spirit contrasting Liang's scholarly and versatile heroes. Their influence extends beyond literature, impacting Hong Kong pop culture and the larger sinosphere. Bloomberg. China's ability to let the yuan float without causing significant market disruption is supported by a majority of analysts and traders in a Bloomberg survey. Despite the yuan's recent weakness against the dollar, most respondents believe the People's Bank of China, PBOC, can manage the exchange rate effectively. The survey, which included 24 financial institutions, indicated confidence in the BOC's focus on yuan stability, even amid Federal Reserve decisions and a strong dollar. The yuan has weakened over 2% this year, but 2/3 of respondents think the market could adjust to a removal of yuan support after an initial depreciation. The PBOC has been setting stronger than expected daily reference rates and, at times, state-run banks have intervened to stabilize the currency. While there was speculation in April about a potential yuan devaluation to boost exports, the survey suggests the PBOC will likely maintain its current approach unless the dollar weakens significantly. The re-election of Donald Trump and Fed policies pose the biggest risks to the yuan, but most respondents expect China to continue its stabilization efforts. Australian Broadcasting Corporation, over 1 billion metric tons of food is wasted annually, contributing to 10% of global greenhouse gas emissions while millions face chronic hunger. To combat this, a Thai company named Yindai, launched in 2021, offers a unique solution. Similar to Uber Eats, Yindai allows vendors to sell leftover food at a discount through mystery boxes. Co-founder Mahima Rajangam highlights that the company has saved over 200,000 meals and offset around 500,000 kilograms of carbon dioxide emissions. With over 800 vendors, Yindai aims for zero waste. The app is currently available in Bangkok and Hong Kong, with plans to expand to Singapore. Rajangam believes every country could adopt similar methods to tackle food waste, and new policies in Hong Kong are pushing people to be more conscious about the issue. Nikkei Asia, Ares Management, a U.S. firm specializing in private credit, has appointed Masahiko Oshima, a former executive of Sumitomo Mitsui Banking Corporation, SMBC, to lead its Japan operations. Oshima, who has a rich background in international finance, will guide Ares as it opens an office in Tokyo this year. Ares aims to tap into Japan's growing alternative asset market, encouraged by government initiatives to make the country a hub for asset management. With $428 billion in assets under management globally, Ares plans to expand its reach beyond institutional investors to wealthy individuals in Japan. The firm has already established a presence in major Asia-Pacific markets and now looks to make Tokyo a central hub for its regional investments. Telegraph, the Caribbean has long attracted the wealthy with its sunshine, clear seas, and favorable tax regime, but obtaining citizenship has become more stringent. As of July, the minimum investment for Caribbean citizenship doubled to $200,000. This change aims to attract serious investors and address EU concerns about money laundering and easy access for certain nationalities. 5 islands, Antigua and Barbuda, Dominica, Grenada, St. Kitts and Nevis, and St. Lucia, offer citizenship by investment (CBI) schemes. These schemes provide visa-free travel to over 140 countries and various tax benefits. Investors can donate to government projects or invest in real estate. The process involves working with approved agents to ensure compliance and typically takes 3 to 9 months. While the primary incentive is citizenship, property investments can yield returns of 5 to 10%, making the Caribbean an attractive option for those seeking a second home and better global mobility. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.
Waking up to wonders, checking nature blunders. Got our rockets flying while the oceans are sighing. Lasers in the sky now, holograms we say